Good morning, good evening, good afternoon, trader Steve at Logic FX Trading. Welcome to our trading room recording on Tuesday, the 21st of September 2021. As you can see, there are no major events scheduled for today, but obviously tomorrow we've got Bank of Japan interest rate decision, and we've got the FOMC economic projections, Fed interest rate decision, and the Fed press conference all tomorrow in the United States. Guys, at some point, the Fed are going to start to taper. They're going to start to pull back their money supply into the system. Whether that's going to start tomorrow or whether they're going to start to hint towards that tomorrow, not sure, but I think we will have some movement in that direction. If it's not tomorrow, it'll be next month. So we need to get prepared for that. How do you prepare for it? Well, that's the big issue. From a dollar point of view, if they move first, then we'll see the dollar rise. But we'll have to wait and see what's going to happen first, guys. Not entirely sure what's going on there. Nobody is, by the way. I listen to Bloomberg all day long, guys, and you get all the experts come on. One expert will say one thing, the other will say the next thing, guys. So we only trade on things that we're pretty sure that it's going to happen. So let's wait and see what's going to happen there. Just over the Flipboard, we didn't talk about it yesterday. Remember, this is the first week back. It's only the second day. I'm building my information up again, getting. It's like you've been off school for a couple of weeks and you're getting back and you're catching up, guys. Yesterday was a big day on the NASDAQ or on the stock market as a whole, but most of what I invest in is on the NASDAQ. We got this, it's a 3% drawdown yesterday. And the catalyst for it was Evergrande or Evergrade, whatever way you want to pronounce that. Which is a massive property owner in China. It's a 300 billion. It owes more than 300 billion, so it's 300 billion in debt. But the important thing is that there's something 18 billion of that is US debt. The rest of it's local debt. But that doesn't mean to say that the world economy is going to escape if this thing collapses, because obviously the Chinese market is a big part of what's being sold around the world, and it drives the world economy as well as the United States economy does. So this could have more downside to it, guys, but I don't think it's a reason to panic. It's never nice seeing everything on your in your portfolio in the red, which is what we got yesterday. We have had a bounce this morning so far with a bounce. Guys, this could be a dead cat bounce. In other words, this correction that we were talking about, or I was talking about, well, specifically yesterday, we could still get that, guys, and it's going to be horrible. But it's only horrible if you panic and you sell. So the time to sell for me is either in prediction of it going to happen, or you have to hold on and buy into it if you've got extra cash, which we do have something like 37% in cash at the moment. So if this gets any lower, obviously it'll be horrible. But things will come back up again. And then it depends what you're exposed to, guys. I have a few stocks that are in the Chinese market. They're not actually on the Chinese stock market, but they're Chinese companies. The likes of Baidu, the likes of Alibaba, and the likes of there was one at Neo, and they're all in the red, and they're all causing me pain at the minute. But do you buy into the dip, guys? That's the question. You've got to, when you don't buy into the dip, and 3, 4, 5, 6 months down the line, prices have come up tremendously, you kick yourself. But at the same time, you buy into the dip and then it goes further down. In other words, you haven't bought the bottom because the bottom is a very hard place to find. Then it can become a very scary prospect. So, but this is investing, guys. This is what we do. I'll probably be buying the dip. I don't think I'll be buying this. In other words, I'll not be diving into much today. What I might do today is, if anything's come up close to break even or a little bit in the green, I might just take some more money off the table just in case we get a bit of a contagion and we get markets dropping. Because if the Fed comes out tomorrow and the market doesn't like what they say, we could see a drop, another drop, because of that as well. So there's a lot of headwinds in the market at the moment. So, it's just tinkering, to be quite honest. But that's what we're doing. We're traders, guys. We're not long-term investors. If you're a long-term investor, you put your money in, you put it in every month, and you forget about it. And in 10 or 20 years' time, you come back and you've made 7% a year over the 10 or 20 years it's been in. That's not what we're doing. We're tinkering. We're getting in and out. So that's why we're so focused on it. But there isn't really that much to worry about, guys, so long as you're in it for the long term. So even if you get it wrong this month, next month, and the month after, so long as you're not selling out at a loss, then you're not going to lose your money. Now, currencies are a different thing, because we use leverage with currencies, and currencies can really run away with us. So we do need to be a little bit more careful with currencies than stocks. Stocks are easier to trade, in my opinion. But particularly now that they're free, well, they're kind of free. There's money to be paid in there somewhere, but it's on face value, you're trading them for free, which is what brought me back to stocks again after taking quite a few years out of trading them. I used to trade them a long time ago. Then I got into currency trading because it was free. And now that the stocks are free, well, they're not really free, but they're free as in it's not obvious that you've paid a fee to buy in and out. Okay. So that's where we are with that, guys. It's looking quite scary. I don't want to go into all the details. There's a lot of other people out there who've already commented and probably know a lot more about it than me, but it's something that we need to be aware of, guys. Okay. Let's just run through the charts then. I think that's all I wanted to say there. Let's go into here, see if there's any other stories. Traders buy Bitcoin dip even as Evergrade's implosion rocks stock market. Now, the interesting thing, we'll have a look at it in a minute, is I don't know there was necessarily a big move on gold yesterday. It was a little bit of a move, but nothing that would... just a little bit unsure about gold at the minute, guys, because usually when you've got a bit of turmoil, you'll see nice movement in gold, but that's nothing to write home about. So the reason I'm more concerned about gold than I am about the Chinese stocks, to be quite honest. So we'll have to see. And the reason for being concerned about gold is, in the back of my mind, there's an awful lot of people saying Bitcoin is replacing gold as a hedge, as it were, as a place to go to. And I don't know if that's true or not. And that's what's kind of concerning me a little bit. Gold and silver, a little bit of a move up in silver yesterday, but I want to see a nice impulse up. We've been in this flat correction for the whole of the year, and we're at the bottom of it, so hopefully we at least move back into the middle, and then we can decide whether we stay in silver or whether we sell out at a small profit. At the moment we're in the green with it, and all of the gold, there are gold mining companies that I'm involved in, and they dropped like a stone yesterday, guys. Hopefully they'll come back today. And then, as I say, it'll be a case of deciding whether I take more money off the table, waiting for more of a dip, or whether I just stay in there. I suspect I'll take more money off. Okay, let's run through the rest of it, guys. Let's go and have a look at what else happened yesterday. So we'll start with the NASDAQ. There's the Dow Jones. That was quite a move on the Dow Jones there, guys. But we're getting a little bit of a bounce this morning. S&P, same thing, a little bit of a bounce. I'm not, overly excited about that little bounce, because we know when things drop, they drop like that, guys. They don't just keep going like that. So we could have a little bit of a dead cat bounce at the minute. Nikkei came off yesterday after that lovely run up, which was probably the reason for the yen strengthening over the last few weeks, was this run up. Unfortunately, I missed that run. I could probably only get into it with an ETF, but that was a nice run. But that's when I was not trading on a daily basis. UK index, nice bounce there, guys, but yet again, look at the drop. Now, it'd be lovely to just see it coming back up. In other words, from here, up we go. I'm exposed a little bit to UK market, not fantastically. I sold out of Samsung yesterday. It came back to zero on me, guys. I just thought, I'm not going to sit with this in the red. If it settles itself out, then I'll buy in again. But I just took it off the table at zero. French, same. Nice little bounce this morning. German, same. The Chinese, small little move there. We were looking for the Chinese market to start to recover after we got that pullback, double pullback. It's running flat, guys. There could be another downside to it. I was looking at what the reasons behind, what the Chinese government's doing. And, when you get into it, really all they're doing is tightening up. They're trying to get these Chinese companies, which have been borrowing and borrowing and borrowing, they're trying to get them to tighten tighten up their ship. And that's not a bad thing in the long term. It's not a bad thing. Hong Kong, Australia got badly hit yesterday, but no more than what we were looking for. And there's a bounce. Let's hope it's not a dead cat bounce, guys. Let's hope this is the recovery. And I think we'll know more tomorrow. And particularly after the Fed, we'll see how the market reacts to the Fed. It'll do one of two things, guys. It'll either continue the drop, or it'll say, okay, we've been reassured, let's go. Dow Jones, DXY. I'd love to see the dollar dropping, folks, but at the moment, yes, you could look at that and you go, it's head and shoulders. I don't trade structures like that as such, not without the fundamental understanding of why it's moving, where it's moving, because these things don't always work out, guys. But I don't know at the minute if it's going to do that, so I'll bring that arrow back and I'll just put it in flat for the meantime. And when I get a better idea of it, then I'll call it down. I was calling it short from here, but yet again, that was a technical short within this flat that it's in. This big flat correction that we're in here over the last year. Well, it's not a year, it's since December, from the start of this year, so it's near enough a year. We did say back then that was the bottom when it would run. There were a few people that called the euro higher, which would have brought DXY down into this sort of zone. So we put a line in there, but I haven't been convinced of that. It could still happen, but there's no movement in the ECB at the minute that would make that happen. So maybe we just keep on bouncing within this, which is the reason why I'm kind of looking for a drawdown back towards the bottom of this correction, guys, but not trading it at the moment. Then Euro USD will be the opposite. Probably looking for a move up out of this, but not at the moment. And the pound then, yet again, it's running flat. It's difficult when they run flat, guys. Aussie, kind of running flat from here, guys. We did say it would, but I would like to see it coming back into this area. New Zealand, same thing. Looking for it to come back up into here, but not trading it at the minute. US Cad. Now, I was looking for a move up in oil yesterday, but apparently it dropped as well. No, not a big deal, but this is a 4 hour. Looking for a bit of a zigzag there. Then maybe it starts going on. I don't trade oil, too expensive to trade oil. But we use it as a, yet again, getting an idea of what's going on in the market as a whole. There's your 3 peaks again, guys, that we saw on DXY. I don't know if it's a direct correlation. When's that peak in there? That was June, July, end of July, mid-August, and then present. Should be the same. Yeah, mid-July. Sorry, end of July, mid-August, and then the same. Yeah, that's the 3 peaks. So if the dollar moved back down within this, DXY moves down within that, and maybe even further down into that. And take this back. You could see that happening, couldn't you? Just from a technical point of view, at least. Because if the dollar's going to continue to run flat against all the other currencies, because nobody is increasing nobody's changing their policy. Now, if the Fed does change its policy, we could see it pushing further up. But let's see if they do first. If they don't change policy, then there's no reason why the dollar won't continue to run flat until something happens. And if it's going to run flat, then we could well see a downside. And the Swedish, exactly the same structure, guys. Looking to see if it will maybe drop. There's your 3 peaks again. Looking to see if it's going to drop. Swiss. Gold. Listen, ultimately this will break long, guys. But it's how long you wait for it. That's the thing. Now, I've already got involved in it. Now, I thought that was it going. And that's why I got involved. I did take some profits, then got involved again, and now I've been stuck in it for a few months from around June time. So it's a few months I've been stuck in those in the red, but I'll just hang on to them, guys. It could continue to correct for the rest of the year, and then in the next year starts to go. May go sooner if we start seeing some fear in the market. We could see another move up. The thing is that if you're going to look at that on its own, it hasn't really retraced that much. Let's just take that as the impulse last year. Oh, it's down 38.2%. If you take it overall, there's not much of a movement on it, is there really? What's that maximum? Maybe 20%. And silver's the same story. It's running flat. Hopefully it bounces off there. Bitcoin, it's also in a bit of a correction at the minute, guys. Wouldn't be surprised if you got more of that structure. It's the same structure there, the same structure there. This is a larger scale because it's come higher. But you wouldn't be surprised if you got something like that before you get the next move up. In which case, if I got down into there, maybe I would buy. I remember people buying it up there saying it was going to the moon. And I got in and out and chickened out a few times and then got out of it and then it dropped. And then I bought in here again and made a little bit of money. Now, guys, I'm not putting massive amounts on here, no more than 1 or 2% of the account size. So I'm trading it the same way that you would trade anything, conservatively. And Ether looks like it's taking a good drop. I've started mining Ethereum, recently, just to get in on it and see what it's like and what sort of they say it's passive income, but maybe once you get your rig set up and running, it's certainly not passive for me at the minute. Put a lot of time into it, trying to get the things to run properly and to stay running. But part of that's my internet connection is shocking at the minute, guys. We've got the engineers coming out tomorrow. I actually thought we weren't going to be able to do this recording today, which, I spent a couple of hours messing around with the router trying to get it to come up, and eventually it did. So if I disappear halfway through this, you'll know why. Oil was spoke about. Listen, energy's getting more expensive. There's a major crisis at the minute in the UK over gas prices. We're going into the winter. Things are going to get nasty. Oil's going to continue to go up. Yes, it's pulling back at the minute, guys, but it will continue to go up. EuroCAD now, this is where we're back to not really sure what's going on, guys, at the minute. What I'll really do with these, I'll start to do with these is I'll decide what's worth looking at on any particular day, and that's what we'll focus on, rather than going through these to tell you that I don't know what's going on, because that's a waste of your time and a waste of my time. So with all of these at the moment, I'm not entirely sure what's going on. Currencies have been difficult to trade recently, guys. I mean, look at that. That's so hard to trade. Unless for whatever reason, you've decided it's going long and then you just sit and ride through it, guys. But it's fine looking at it when it's happened. And you go, oh yeah, well, you could have jumped in and out of that. Certainly you could have. But you're jumping in and out of it long. What happens if it does that? Then you just lost all the money that you worked really hard to get in up here. So unless I know with a high degree of probability that, say, the dollar's on the run, and therefore even with pullbacks, you're going to get out of it again quite quickly, that's fair enough. But when you get this sort of thing, guys, it becomes really, really difficult, because if you don't trade it in the right direction, in other words, if you think it's going to go short, then fair enough. Get in at the tops and eventually you'll make some money. And as it turns, get out again. But the problem with that is if you don't know what direction it's going to go in and you're trading that way, the day that it does that, then you're going to lose your money, guys, if it goes off the wrong way. So you need to know which direction it's going in. And at the moment, it's very, very difficult to tell which direction any of these are going. Usually what I do is we know where the dollar's going, and therefore we use that as our guide. But at the minute, the dollar's running, I'd say at the minute, this whole year, the dollar's running flat, and therefore it's been tough. And what happens, guys, when it's like that is that you can trade it, but you'll get it wrong as often as you get it right. And it just becomes a lot of really hard work for nothing. And that's why I'm kind of just saying, at the minute, I've got nothing exciting to say about trading currencies. You can see all of them. They're all doing the same thing, guys. It's all this corrective structure. Nothing's moving impulsively. But even that, you see, you've a good long run in that, which, by the way, the last time I traded this, was trying to trade it up from there and got stung and then gave up on it. I do think the next move in this will be long, just from a technical point of view. But I'm going to bide my time and wait till it starts to move long, understand the reason why it's moving long, and then we'll trade it up. Aussie Swiss, talked about this yesterday. The difficulty I have with this at the minute is that, well, if we go into some sort of drawdown, you could get a move to safety, which means that the Swiss is going to get a boost, which means this could go off in that direction, rather than the direction that I would like to try and trade it, would be the other side of that. From a technical point of view, that looks like it wants to do that. But because of current circumstances, I'm very wary that we end up with something like that, or even it just dropping like that. See it? So I'll not be trying to trade that either, guys. Aussie Cad. Swiss Yen. Now, we did say we could get a little bounce on this yesterday. We're on 4 hours. Let's see if this develops a little bit. There's a nice little move up there, but gives us some sort of setup. Maybe we'll look to start trading that up. Cad Swiss. I have a very good record of trading this, guys. In fact, it's 100% over the last year. But I just don't like it. Look at it. It's very unpredictable at the minute, folks. Cad Yen. I got my 100% trading it up whenever, because we knew that the Cad had been oversold. Remember when oil hit the deck? We just knew that the Cad was going to get long from here. It was a long, slow process, but we jumped in and out, and in and out, and in and out. But once it started this correction, I've got a little bit less sure of where it's going. But if it drops again, if it comes lower again, then we'll look to trade it up. But trading it long out of there, it's a little bit speculative for me. Cad Yen. Looks very similar, doesn't it, to the Swiss Yen, or Swiss Cad. Dropped, came up, dropped again, and then off it went. And it was a nice time to trade it because we knew what was happening. I chose to trade, so as not to overexpose the account, I chose to trade the Swiss against the Cad rather than the Yen against the Cad. So we didn't trade both of them. I was in both of them at times, but traded one rather than the other. And this could well do the same thing. But let's wait and see if there's any more fallout from this Evergrande situation, guys. Because if there is a big drawdown, then you will see the Yen and the Swiss strengthening. So today's not the day to start trying to trade that up. And for the same reason, you could well see that. New Zealand Cad. I think if the oil price continues to go up, we will get a bit more strength in the Cad. Cad's New Zealand Swiss, same thing. Be careful that we don't get something like that, guys. If we do get it, then we'll try and trade it up. But I wouldn't try and trade it long from there. And then Cad China. Yen China. Now, this isn't something I've ever traded, guys. I can't remember the reason why we started looking at it. And just quickly look at physical gold. I do think that that's in the offing, but, well, not in the offing, but it will happen It's just the timing of it. So let's wait a little while. Okay, guys, that'll do for the day. Nothing in depth at the minute. Just trying to get my head around what's going on, and we'll get there. Okay, bye for now.